I don't think, gold has ever gone away. It's just kind of been on the back burner for a while, and maybe like Bitcoin or something stole the spotlight for a while, but that's done. I think gold is going to come back in a big way as people recognize the box that not only the Fed is in, but the Bank of Japan, the Bank of England, the ECB. So all of these major fiat currencies are going to be losing a lot of value. So you got to get rid of them. And then what do you buy? Well, gold is the obvious alternative if you want liquidity and you just want to store value and you don't want to hold these fiat currencies. If you want to invest, you have a lot of other options. You can buy stocks, you can buy real estate. But if you just want to keep some dry powder, gold is your best alternative. What I think is going to be interesting, though, about the next decade, and it's ironic from the perspective of the Bitcoin people, is they were certain that Bitcoin was the end of gold, and it's not. I mean, maybe gold is the end of Bitcoin, because the best use case for blockchain is gold, not Bitcoin. See, what the Bitcoin people liked about Bitcoin was that it was easier to use as a medium of exchange than gold. The whole reason that they took gold and made coins out of it was so we could exchange them with each other in commerce. So if I wanted to buy something from you, I handed you some of my gold and you handed me whatever it was you were selling. Mm-hmm. But I don't have to hand you the actual gold. I can just transfer my ownership to you. That's what they did with paper money. They said, hey, instead of carrying around your gold, just take these pieces of paper, because the gold is in a vault and the paper is just a representation of the gold that you own. Well, it's even easier if we can transact in a digital representation of that gold ownership. Fiat currencies are bad, central banks, all that, but then recognize the real alternative, the real hard money is gold, because these guys have been told that gold's worthless, gold's nothing, gold's a dinosaur, gold, so they have to unlearn all that negative, propaganda, really, anti-gold, because that's how they were, building a case for Bitcoin. And I've been afraid since the beginning, though, that this was going to backfire, that a lot of the people who, were worried about inflation and government and central banks were going to end up losing even more than the people who weren't, because they would have, jumped from the frying pan into the fire by going to Bitcoin. And then the government is going to end up using this example of people getting wiped out in Bitcoin as, hey, see, the free market doesn't work. The free market came up with Bitcoin. It was a whole scam and you lost all your money. You need to trust government. See, our money is much better than the free market money. So I think it's going to end up doing harm, damaging the case for sound money. And government's going to exploit it to try to increase its power. But some people, yes. I mean, some of the people maybe will make the jump intellectually. Okay, yes, we still don't like fiat money. We still don't like central banks. We screwed up with Bitcoin, but now we understand that we should have just gone to gold all along. When you have these boom and bust cycles that are a function of monetary policy, you keep interest rates artificially low, you engender a bubble. You get a lot of speculation, asset prices get bid up, consumers behave recklessly, businesses, everybody speculates, everybody spends, savings go down, real investment goes down, malinvestments go up. So the whole economy gets all screwed up during these bubbles. Then when the bubbles pop, now we have to correct the damage, and you get a recession as, prices are, assets are repriced, businesses that never should have started go out of business. You have this unemployment as people lose their jobs at the companies that go away, and there's some transition before they get new jobs at other companies that start up or expand. So proportionately, the bust is in proportion to the boom that precedes it. So the longer the boom, the more mistakes that are made, and the deeper the recession that ends up being necessary to correct them. We've never had rates so low for so long. We've never had this type of expansion in the Fed's balance sheet. So this is the biggest artificial boom that we've ever experienced. And it stands to reason that it would be followed by the biggest bust. Just like, we had a severe recession in 2007, 2008, following the bursting of that bubble. Well, this is an even bigger bubble than that one was. So if we call the 2008 recession the Great Recession, what are we going to call this one? Because it's going to be a lot greater than that one. And so it's, old-fashioned stock picking, value investing. Forget about the indexes. You're going to lose money in the indexes because they're dominated by these overpriced stocks. I think for most people, it's going to be international, not domestic. The US is really where it was at the last decade or so. We have the biggest bubble. I think the dollar is going to fall sharply, and so that's going to undermine the real returns on US stocks, which are going to be negative anyway. So I think you got to look at international markets, you got to look at emerging markets, which I think are cheap relative to developed markets, and you got to look at commodities. You got to realize that, energy, agriculture, metals, this stuff, is underpriced, going a lot higher. And that means the companies that have these resources and that are harvesting them or, extracting them or whatever they're doing, they're going to see big increases in their earnings as, they're getting higher and higher prices for what they're selling. So you want to have exposure there. I mean, that's what we're doing now with our investors. We've been positioning for years. In fact, I got positioned too early. I saw this train wreck coming from a mile away. Mm-hmm. So, I've been prepared for longer than necessary. But with the benefit of hindsight, it's easy to see, I buckled up too soon. And you can start to see the relative performance of my portfolios. I mean, year to date, we're crushing it. I mean, a lot of my accounts are positive, a lot of my funds. While the markets are imploding, and even now, if you go back 2 or 3 years, we're outperforming, even some funds now 5 years after, lagging. But I still have a lot of catching up to do over 10 years. Mm-hmm. But I think by the end of next year, I'll be caught up, and I think I'll even surpass everybody over the 10-year time horizon, because things are rapidly, rotating into my direction. Mm-hmm. But, the good news for people who haven't made that rotation yet is there's still plenty of time to do it. US stocks are still very overpriced. The US dollar is still very overpriced. So it's plenty of time, even though the markets are down, they're still way up over a longer time horizon. You can still sell these overpriced US stocks and US dollars and get into much better valued foreign stocks, foreign currencies, commodities, so that you can actually have positive returns over the next decade. Because the people who are sitting in the US stock market are going to lose money. And in terms of inflation, when they try to take those returns and make them real, the losses are going to be phenomenal.